Well, good morning, everyone. Wonderful sunny morning here in West London. I'm David Paul, uh, and I'm the Managing Director of VectorVest in the UK. I was on Core Finance a week ago, and I spoke about the VectorVest's most conservative trading plan. We refer to it as worry-free investing. Today, I've got something more speculative and three speculative counters for spring. And before we get there, I just want to have a look at the state of both the UK stock market and the American stock market. And the UK stock market has sold off a lot in the last week. So as we go into the trading day, the short-term trend of the VectorVest composite, which is an equally weighted composite of all the shares that we follow on the London market, 2,200 shares. The short-term trend has been down for the last 5-6 days. The medium-term trend is also down, but the long-term trend, which is the signals that are on that chart, is still positive. The long-term trend has been positive since the 11th of November. So although those people that swing trade with us, those people that are traders over, let's say, a few days to a few weeks, longer swing traders, I suppose you would call them, those people should have in fact exited the market. Longer term position traders are still holding on, watching their stop losses very carefully. Now, the line study that I have in the window below the price is the proprietary VectorVest model of market breadth. And as you can see, over the last month, the London market has made a double top, but the breadth indicator, the buy-sell ratio, couldn't in fact get anywhere near a double top, and it's made a divergence pattern. And that's always a worry, especially as the buy-sell ratio in fact moved down from a mega overbought position. So I'm telling all our customers to watch their stop losses very carefully indeed, and that if we do get a long-term confirmed down signal, that signal needs to be taken very seriously indeed. I think that the two end effects or boundary conditions in markets is that when it's the right time to buy, you won't want to, like last April. And when it's the right time to sell, you also won't want to, because we're scared of missing out on more upside. So just be aware of those two boundary conditions. The American market, incredible days. We had that big sell-off on Tuesday, the push-up on Wednesday, and then, of course, the huge sell-off again yesterday afternoon. As you can see, the VectorVest composite, that's the long-term trend. It's still up. And in the US, the short-term trend is down. The medium-term trend is still up, but on the longer-term trend is still up. As you can see, the market has pulled back, but the breadth, the buy-sell ratio, has fallen out of bed over the last week. So again, we see that divergence between the price and the buy-sell ratio, not quite as marked as it is in the UK. I would suspect that after the sell-off yesterday, that we get maybe a little bit of a bounce today, but any break of that trend line, there's a great deal of fresh air down there. That's the S&P 500, which shows clearly the huge sell-off and reversal on Tuesday, big up day on Wednesday, closed on the high of the day, and then fell out of bed yesterday. A break of that horizontal line that I've drawn, and I think that we could quite easily see another couple of 100 points. I don't think you should be shorting it today. Those people that short markets, it'll probably bounce today, I would have thought. Just be careful. You need to look for an entry if you do want to short the market. Now, three speculative counters. The first one is 4D Pharma. And 4D Pharma, there's a great deal of positive news around if you actually read about the company. But my perception this morning is technical. This share, it's trading at it's off a little bit this morning at £1.40. It was one of Neil Woodford's darlings, but he bought it at £10, God bless him, and it fell right, as you can see, till about 30 pence. It's broken up, but the Nice thing about the share is that every time it's rising on rising volume and falling on falling volume. It charted a double bottom and then rose from there. Charted a textbook flag and has broken out of the flag, doing its best to get above that 140, 145 level. There is very positive news and a listing on the NASDAQ ahead for this company, and the flow of products is quite amazing from this small Leeds-based pharmaceutical company. I think the going's not going to be easy. There's going to be an awful lot of noise, but this certainly merits your attention. I like GameSys, and GameSys fundamentally comes out exceptionally well on VectorVest. The green line is the VectorVest valuation. As you can see, the share is significantly undervalued. The blue line is below the price is earnings per share, which is growing. The company's making money and it's growing. Those of you that are technicians should be able to see the cup and handle pattern. That cup and handle, relatively easy to see on the chart, and it would seem to have broken out of that. And the target from the cup and handle and the VectorVest valuation are one and the same. So I really like that. I have a position in both stocks that I'm speaking about. This is probably the most speculative of the lot. This is a copper play plus a few other metals in Phoenix, and clearly a rare ore body, an excellent ore body in a politically stable country. This share has been actively accumulated over the last year, rising and rising volume, pulling back on falling volume. It's in fact broken out of quite a classic 5-wave continuation pattern and then pulled back the other day. There was some news that you can research out of the company a few days ago, and I like the look of that. It's rising and rising volume, and sooner or later, I think that's going to be a huge opportunity. Again, like Treble D Pharma, the going won't be good. So, folks, we could have a few challenging days and markets ahead. For many months now, market participants have been waiting on news of stimulus to give the market more legs. Well, at the moment, the market would seem to be worried that there's actually too much stimulus. And as you know, the Democratic Party are in control. They've proposed a $1.9 trillion stimulus package, and that's on top of the $900 billion already agreed by the Trump administration. Ladies and gentlemen, that $1.9 trillion would be a roughly 10% of American GDP, which is pretty much the same as the entire UK GDP. And the bond market certainly is worried that that's going to cause inflation. And if you just look around markets, you see that corn, soybeans, copper, platinum, oil, all trading on multi-year highs. So inflation coming into the market could cause chaos in many asset classes. So as I say, the paradox is for many months we were worried and waiting on stimulus. Now the market, certainly the bond market, seems to think that there's too much stimulus, and that's caused bond yields to rise and rise quite strongly over the last week or two. So I think a great deal of that confusion and angst is causing this turbulence that we're seeing at the moment. So all we can do is stay in the moment and focus on what's happening now. And certainly in both the UK and in the US, the short-term trend of both markets is down. And I certainly won't be buying any more shares until the short-term trend turns back up and joins into the longer-term trend if and when that happens. So it's a few days to watch stop losses very carefully indeed. And just remember, when it's time to sell, you won't want to. So take those stops without fear or hesitation. It'll just a matter of pressing the button to get back in again when things get better. I hope this helps. If you want to have a look at VectorVest, folks, vectorvest.co.uk, and there you can take a 30-day trial of the product for £5. Okay. If I can help, david.paul@vectorvest.com. Thanks very much indeed.